Hey everybody, JJ. It's Monday, October 19th, 2020. Some news to cover today, some very important news. Now, we told you yesterday that there was not going to be a market crash. There were people out there, economists out there, sounding the alarm that this $80 trillion being transitioned from the LIBOR standard to the SOFR standard was going to cause some major disruptions. Well, the market did sell off a little bit. Let's take a quick look at the markets here. S&P, Dow, NASDAQ all down about 1.5%. Precious metals still hanging in there pretty good. Gold at 1906, silver up 0.25% up to $24.47. Oil still hovering about $40. Now let's get into this prospect of a Fed digital dollar. Now there's a lot of theories going around right now. Let's take a look at some tweets here. This is Raoul Pal. And I believe he's the founder of a very popular YouTube channel called Real Vision Finance. He is also the founder CEO of Global Macro Investor. So what does he say? He says, if you don't think the central bank digital currencies are coming, you are missing the big and important picture. This is going to be the biggest overhaul of the global financial system since Bretton Woods. Now, according to Raoul here and a few other people, this is very similar or reminiscent of a global currency. And you might have heard theories throughout the year that eventually we're going to go to a one world currency. And this is the biggest thing to happen to currency since the Bretton Woods Agreement back in 1944, when the dollar became the global reserve currency and the standard for international trade. And this is not some crazy theory. This is actually out of the IMF. And Raoul continues here, talking of Bretton Woods, this IMF article alludes to a huge change coming, but lacks real clarity outside of allowing much more fiscal stimulus via monetary mechanisms. And tomorrow the IMF holds a conference on digital currencies and cross-border payment systems. Now that would be today the 19th, as Raoul tweeted this out on the 18th. But it's not just the IMF. This was first floated out by Mark Carney at the Bank of England over a year ago and set the course for the new system. His big idea is a move away from the dollar using central bank digital currencies, so its effects on world trade flows and debts was not so pronounced. The ECB, European Central Bank, weighed in many times in the past year, but the latest is clear. Central bank currencies are coming soon, very soon. Now there might be some confusion on this. We talked about in our last report that most currency right now is digital. It's not in physical form. So paper and coins are less than 10% of all the currency in the world. But this is actually something much different. It's no longer going to be the dollar standard that we're used to. It's still going to be fiat. They can create as much of it as they want to, but they can likely put in much more controls now versus what we have in the dollar, what freedom we do have left by using the dollar. And it's going to be transition in periods, and this is according to a lot of research that I've done. Even Lynette Zhang says this. She says this is going to be a transition in different increments, and they're going to try to make it as smooth as possible, not to alarm people. They'll likely still call the Fed digital dollar here in the US the dollar. So if the IMF has their way, this could be coming very soon. Some people say as early as January 1st. There are other theories out there. Other people say that no, there's going to be something else that happens. We're going back to a gold silver standard. So people are theorizing or trying to guesstimate and trying to prepare for different outcomes. No one really knows exactly. But I do think we're going to see a lot of surprises between now and the end of the year, so we need to prepare for the worst case scenario. So whether it's a devastating deflationary collapse, which I would like to see, because that would bring back true price discovery, and some of these bubbles need to pop anyways. But the worst case scenario, in my opinion, is more inflation, hyperinflation. And we've heard about this so-called economic recovery. Well, let's look at some more updated numbers that tell us that there really is not much of a recovery. Yes, people are getting their minimum wage jobs back. Some people are being called back to work, to the fast food places. But all the talk we heard over the past 4 years about bringing jobs back and bringing manufacturing back, that has failed. Actually, this year was the biggest year of importing goods in about 20 years. So how's this recovery looking? Well, let's take a look. Recent article today out of Yahoo Finance. More than 6 million households missed their rent or mortgage payments. That doesn't sound like much of a recovery. Persistent layoffs are slowing momentum in the labor market, which bodes poorly for the broader U.S. recovery as millions of out-of-work Americans delay their mortgage and rent payments. What happened? I thought there was this amazing recovery. In September, over 8% of renters missed their payment, while over 7% of homeowners missed their mortgage payments. That's a lot of people. The number of renters receiving unemployment benefits rose from 3% in early April to 7% by the end of September. The numbers are getting worse, folks, not better. Also, people with mortgages getting unemployment and jobless aid did not change. It's been 3%. It's been pretty steady, but it's not getting better. Also, if we were in a recovery, wouldn't the Fed be able to pull back on their stimulus? Wouldn't they be able to unwind their balance sheet? Well, let's take a look. Starting in March, we saw the big ramp up in the Fed's balance sheet. And no, we did not see the Fed shed assets from their balance sheet. It's actually still rising. We're over $7.15 trillion right now. Now, this is my analysis. This is what it looks like to me. They've got a lot of people in debt right now, dependent on the system. And ask yourself, the people at the top of this financial system, the monopoly men, the fiat currency bankers, do you think they want more control or less control? Do you think they like it that most people are in debt and living paycheck to paycheck and begging for the next handout? Right? I think your opinion on that might be the same as mine. I think they want more and more control. And I think a lot of people out there paying attention would agree. And the next step is going to be digital dollars that could be put right into a new checking account or they may call it a Fed count. They may give it a different name. They still may use regular banks to try to keep up the appearance that it's still the old-fashioned system. I also expect some sort of consistent UBI type of payment to be pumped out to the people. And when people get desperate, they will take whatever they're told to take, including jumping through whatever hoops necessary in order to feed themselves, in order to feed their family. This could get real ugly. I'm hoping not. I mean, that is a worst case scenario where we see a real dark world unfold and the little freedom that we do have being taken away from us. I hope I'm wrong. I say that, when I give these types of forecasts, and it's not really a forecast. It's just something that I think you should prepare for. And no one actually knows the best way to prepare. Just try to be well-rounded, preparing as far as necessities, basics, food, water, shelter, protect what you have, self-defense units, hard assets, things you can barter with, goods you can barter with, coins you can barter with, precious metals. We'll see if the dollar lasts much longer, hoping that their value will not be inflated away through this bubblicious inflationary economic system. Thanks everybody for watching this report. Stay well, stay safe, stay prepared. Bye for now.